So I have a mixture with the daily system. I trade it with both the ASX market and the US, and I'm pretty much net short in the ASX. And in the US, I have a mix of a couple of long and shorts open. And we'll have a look at a chart of the US now. So if I go over the page, you've got the S&P 500 for the last 10 years in here. So the S&P 500, you can see it had its bull market throughout 2003 right up to the beginning of 2008 where it collapsed. And we've been in that bear market where it has fallen very strongly throughout 2008, bottomed out in 2009, and then started to recover. And we have had new highs being made. I'll just go to the next chart, which is a 3-year chart, so that we can zoom in on what the market's doing right now. So this is the US S&P 500 for the last 3 years, and you can see how it's broken down. It's predominantly below that 30-week moving average. Then it recovers and goes above it, and it's formed like, it's a bit like a horn pattern. It's not your triangles. The triangle is usually the reverse way. You've got a bit of a horn pattern occurring with not a straight support line. It's a bit of a diagonal line. And at the moment, the US markets are holding that. They collapsed last night, but they came back and still closed within that range. So at the moment, they're still holding themselves in there, and they haven't broken like the Australian market has broken. But who's to say that, you know, we may be in for a break? I don't know. We may be in for it churning sideways for a while. I don't know.
Yeah.
So I don't predict what the market's going to do. I just trade my signals, and if I'm getting strong signals in one direction, that's the direction I'm trading. So, for example, yesterday when I ran my daily scans on the ASX, there was nothing on the long side coming up in the scans at all, and there was quite a lot of choice on the short side. So it confirms to me the market direction by what my system is bringing up as well. And probably let's have a closer look now at some actual shares. So I'll do that in a moment. I'll just have a brief talk about what's happening over the trading year. So 2010 has been a challenging trading year for many people, and that's because, you know, we churned sideways for so long and now we've collapsed down. So we've had a lot of shares that have come back since the global financial crisis, but they've been churning around, and now we've had most of them breaking down. So we've had a complete recovery with a lot of shares that are back up at their highs of where they were before the global financial crisis. And I've been watching some stocks with real interest and wondering whether they can go higher, whether they're going to break higher and move beyond their past levels, and a lot haven't. And it's all just come at this point right now. So as we can see, the XJs was churning sideways for the most part of this year, and for a trend trader, that's a difficult period to trade. You feel like you're breaking even. You're taking trades, everything runs well for a little while, and then all your stops are hit and you end up in the opposite direction. And it's when you get a clear break like we've had now and the volatility coming in that the big money is then to be made. So, and that's what's just happened now. So if you know how to short sell, you can be profiting from what's happening in the market now. The S&P 500, on the other hand, is still making some new highs, and the lows aren't getting lower at this stage. So it'll be interesting to really watch those charts and see what unfolds over there. But market confidence has definitely fallen strongly. I mean, after being through the global financial crisis, we have had a recovery, but people are still fearful out there, and any sign of anything happening where there could be bad news coming out, it just scares people off and people start freaking out. So we've definitely had a drop in market confidence, and that's due to the GFC in 2008 that we've been through, and with the Greek debt issues and the weakening euro that's been going on in the European markets, that's been dragging everything down. Plus, to top it off in Australia, the government's talking about a resource tax, and that's really plummeted our mining stocks. So because Australia is predominantly a resource country, and our stock market is made up of a large percentage of mining stocks. So if those mining stocks are falling, that affects our market. And with that news coming out and all the resource stocks dropping, it's really dragged our market down. And the word is that overseas companies are also selling down Aussie stocks for this reason, which is driving further pressure on our market. Now, I don't know if any of that's true. It makes sense, but the charts are also showing me that the market is falling, and that's what I'm looking at.
With to build on that as well, I suppose it sounds like when you looked at the chart and you compared the Aussie to the US and you saw that breakdown in the Australian market, it's like there was that catalyst which has pushed that through, being the resource sector, and it's almost like I think the US is looking toppy. It almost needs that catalyst, be it a bit either something to happen in the US or maybe the Greek debt situation to get a little bit worse. But if there's some sort of catalyst, then it might have that chain reaction.
Yeah, and it's not going to take much. I mean, after what we've been through with the GFC, it's not going to take much to scare people away again.
Yeah.
And people to want to start selling. And as I mentioned, a lot of shares had already recovered so much since the global financial crisis, and that they'll back up near their highs. And if anything, some of the charts look like they've topped at the same price as they were before the global financial crisis, and now they're falling back. So I've got some charts to show you of some of the top 20 stocks of the Australian market, just to see what they've been doing. And we can see where that's happened. So let's have a look at a few of them now.
Yep.
So this is BHP. This is one of our top resource stocks. You can see it's recovered quite strongly through 2009, 2010. It didn't get back up near its highs before the global financial crisis, but it was heading up that way, and it's moved sideways and started to top out with a possible double top. Break of a neckline in here with a gap move breaking below.
Yeah.
And that's the signs of a stage 4 downtrend. When you see it falling below a sideways trend, breaking a trend line, especially when you've got a gap, that's a very strong move. So it's looking unhealthy at this
These were
stage.
weekly charts, weren't they?
Yes, they're all weekly charts.
Pretty significant moves there.
Rio Tinto, I mean, it looks identical to BHP pretty much. They do sort of copy each other. Obviously, it has been a lot higher than BHP has been. So BHP had recovered a lot closer to its highs than Rio did. But the same pattern's evident here, where we've seen the market churn sideways, a double top appearing, and then you've got that gap move and a break of that support line there. So they're the top 2 mining stocks. Next chart's one of our top bank stocks, Commonwealth Bank. You can see Commonwealth Bank's come up to nearly its highs of the global financial crisis, up near the $60 mark, and that's where it's had difficulty going higher, and it's collapsed down now. Now it's still holding support, which is roughly around $50 at this stage, so it will be interesting to see whether it can continue to churn sideways here or it will break down.